You're watching news headlines on mining.com. I'm Devin Murrigan. Gold started the week with a steep drop, plunging nearly 3% as a temporary tariff truce between the US and China boosted market sentiment. Spot gold falling to $3,235 per ounce, its lowest in a month, while US gold futures tumbled $102 to $3,241. Now, the sell-off follows a deal reached in Geneva over the weekend where both nations agreed to cut tariffs to 30% for 90 days. The truce fueled a rally in equities and the US dollar, while hedge funds smashed their bullish bets on gold to a 12-month low. Analysts warn that gold remains vulnerable to further declines if trade optimism persists. The US-China trade truce may expedite rare earth export permits for US companies, though a full removal of restrictions is unlikely. That's according to industry insiders. China imposed controls on 7 rare earth minerals in April, requiring exporters to secure licenses amid a trade war with Washington. Now, with a 90-day tariff pause, Beijing could speed up the export permit process, potentially benefiting US tech and defense sectors reliant on Chinese rare earths. Tesla CEO Elon Musk has already begun talks with Chinese authorities to secure rare earth supplies for the company's Optimus robot production. Despite the potential for faster approvals, analysts warn China is unlikely to lift controls entirely, aiming to maintain leverage over critical minerals. The metals company has raised 51 million Canadian dollars to fund seabed exploration. The financing comes as TMC awaits a commercial recovery permit, part of its bid to mine polymetallic nodules in the Pacific's Clarion-Clipperton zone. Shares rose 6.7% on the news, lifting TMC's market cap to 1.1 billion Canadian dollars. The funding follows TMC's application for the world's first international seabed mining permit under a recent U.S. executive order to fast-track offshore mining. TMC plans to extract critical minerals like nickel, copper, and cobalt, but faces backlash from environmentalists concerned about seabed biodiversity. Australian pension fund Hester has sold its remaining 14 million Australian dollars stake in Mineral Resources. It cited serious governance concerns involving founder Chris Ellison. Hester says its repeated calls for governance improvements went unheeded, prompting the exit. The fund also pointed to the recent resignation of key directors on the Ethics and Governance Committee as a significant step backwards. Mineral Resources says it remains committed to strengthening governance with a new chairman's appointment well advanced. And that's where we leave your news headlines on mining.com. Bye-bye.